Welcome back. This is Open Exchange. You're watching us live from the CNBC TV18 Motilal Oswal studio. Well, for now, we have Manoj Murlidharan, Vice President Derivatives at Religare Broking, who joins us now to give us his views on the F&O market. Manoj, hi, good morning. This is a tricky market, right? At this juncture, are you a bit cautious? And if yes, what are the stocks that you're looking at now, and what's the overall trend on the index?
Good morning, Sonia. Sonia, I guess this is a market which is led more by liquidity and the sentiment that we have for the impending event which comes in. And needless to say, Jan was the first month, I believe, in the last 2 years where the Nifty started with a positioning on almost 1.25 crores in terms of open interest, which usually is around 80 to 90,000, and then we have some short positioning. So maximum long positioning along with the cash position that we are seeing from both the FIs and DIs. So we believe that this has more room on the upside. At least at 22,300 in the next short term is what we are expecting, and a good support at somewhere close to 22,000. So at least intraday specific, I believe that 22,030 to 22,050, that's the support for the Nifty futures, where you can volunteer a long trade or buy a call option of that strike, and the target can be an ambitious around 22,200. Now, positional, we believe that yes, it is always when the banks help the Nifty, we see this upside sustain, and the Nifty has a rally which usually lasts. But then if there is a quant analysis that runs, we are almost at a ratio of 2.19 if you simply divide the bank Nifty by Nifty, and this has a support somewhere close to 2.16. So some underperformance from the banks in the next maybe a fortnight or 20 odd days is very much possible, and after that we would expect that the Nifty might get into a further upside. So the positional view is Nifty has upside maybe at 22,500 to 600, at least for the short term, and the 18th expiry 22,300 would be the target that we have.
In terms of specific stocks, what's on your list?
Right. We believe that the gift Nifty is a bit negative, so a flattish opening can be expected. So a better way to trade such a market is to look into the weighted average price of the previous day. That's a good way you can continue the long side. So NTPC tops the list. 314 to 315 is where we recommend buying there with a stop loss of 307 and a target somewhere close to 326 on that. India Mart also wait for a dip somewhere close to 2610 to 2620. That becomes a buy with 2590 as a stop loss and 2660 as a target. Both these stocks we recommend buying in the cash market.
All right. Well, let's do one thing. Thanks a lot, Manoj, for that. That's Religare Broking with their views. Let's get you some top